All right, we are live. What's going on, everybody? It's another Ask Me Anything happy hour, and we've got the full Brady bunch in the house. So we are ready to answer your questions, and that's what we're going to do. We're going to get down, we're going to get dirty, and we're going to rumble right after this. Steven, did that play for you? Like, could you see that whole thing playing?
Oh, yeah.
It did.
I got major issues on my computer. If I start getting a little wonky over here, let me know. But, folks, thanks for joining us. It's another Ask Me Anything happy hour. We are streaming straight up to YouTube, Facebook, and, of course, Instagram. TikTok can piss off. We don't stream to them anymore. But with that being said, do we have any pre-submitted questions? And does that kitty cat have any questions for us? 'Cause I'm a master of questions for cats.
Meow.
So, Steven, Shauna said she had one question already.
All right, we got a couple pre-submitted questions, so get those questions in. I'll get those just a second. Let me introduce everybody. Got a couple new faces on here real fast. So, Stephen Nagy, what's up, everybody? Ready to answer questions. So I'll pass it over to Mike Samet.
Mike Samet from St. Augustine, Florida. That's on to mute.
Gabe, you're on mute.
Oh, I'm so sorry. Gabe Britannia from Newmarket, Maryland. I'm sitting in my jiu-jitsu studio that was financed with my IBC policy. I'll pass it to Jason.
All right. What's up, y'all? Down in here in Florida, down the city beautiful, as Steven likes to call it. Actually, he does not like to call it. But just having fun with this crew, answer your questions, serving you, just talking about the banking process. And over to Miss Tess and her case.
Real fast, though, I did give a shout out to City Beautiful on What the F this morning, did I not, Chris? Because you're going to be there Friday.
You did.
All right.
There you go.
No need to hate on him. He gave you shout outs.
Nothing but love here. Nothing but love. What's up, Tess?
I'm Tess, and this gentleman is Acro, short for acrobat. He loved to do tricks when he was young. And Stephen said he needed body, so I decided I'd join the body count.
What was that rap song? Body count? I'm dating myself, am I not?
Over to Carson.
I remember it. I just can't remember the name of it.
It was Ice-T, and the song was Body Count. I remember that. So
yeah.
If this is not your first time here, I'm sure you've seen Tess's name in the chats, commenting, giving her 2 cents or enthusiasm. So I'm sure you guys have seen her before, but this is her in real life, guys. Look at her joining us today. This is awesome.
Very cool.
she's pretty up the group. Thank God.
Finally, some feminine energy here. Carson Herlene out of Southern California. I actually today closed on another refinance on one of the burrs we were doing. So been working on some real estate this week, but about to start my 4th policy this month. Things are going good.
Nice.
Linus.
Going up to Linus.
Hey guys, Linus Nolt here from Hopkinsville, Kentucky. Once again, I've been missing in action on this Ask Me Anything the last several weeks. We have a new member of the family. My 4th child was born a few weeks ago. This makes 4 girls for us, and so I'm looking at 4 new policies right now. Yep.
God bless you, Linus.
Thank you.
5 women and Linus. I say he's got to get a male dog or something. So.
All right, Mr. Fouts.
Well, Brian Fouts up here, Washington State, Pacific Northwest. Actually, next week is my last week in the state. After that, I'll be in northern Idaho, out in the middle of nowhere. Still doing calls, still doing information. So, actually getting ready to start. Actually, I think 4 policies here in about a month or 2, because I'm actually moving out of Washington State. So, yeah,
awesome, man.
Going to a red state finally.
All right, so we got a couple questions. I'll kick things off with. So number 1, how do conditions like, for example, autism or neurodivergent, being on the spectrum, affect a person's rating with underwriters?
That's a good question. So actually, well, you're muted, Chris, by the way. I'm actually going to be.
I was jamming out to Ice Cube over here. Body count. Or Ice T, not Ice Cube.
So to answer that question, so I'm actually going to be going through that same thing. Actually, my son is autistic, so he's turning 12 years old here. I'm going to be getting a policy on him, but it depends on the level of autism, the different types, the diagnosis. There's a lot that goes into it. It's not a straight answer, but if they're high functioning, they can be self-reliant. You can typically get a policy on them. If they're under, what age is it, Linus? If they're underage, what is it, 6 or something? It's very challenging to get a policy on them. They have to be over a certain age so they can actually truly diagnose the level of autism they have. But like my son is high functioning. I don't see any issues with him. He doesn't have any physical, he talks, he speaks, he can function, cook dinner, all that kind of stuff. So he shouldn't have a problem. So it just depends on the level.
Thank you for sharing that, Fouts, and thank you for the guidance on. I think it comes down to a little bit. Just look at it from the insurance company standpoint of risk, right? Like if it's something that's going to be a physical element versus something that's more mental and things of that nature too. So every time it's like we always say, it's specially engineered each time where it's a specific case for a specific person. So we can always take that information if you're wanting to know and go to underwriting and ask them, like preliminary underwriting, and find out. So.
Yeah. And actually, I have a client that has an autistic son. That's what we're doing right now is they're gathering the information on him, and then we're going to be going through preliminary underwriting before we do anything to get that so we have the response ahead of time.
That's a good question.
All right. Very good. Very good. What are you listening to, Ice-T, Chris?
What am I listening to? Here we go.
No.
I can't hear it. Must be your directional mic is too good. Anyways, Ice-T, better known for his original jam Cop Killer, who then went on to ironically become very, very rich and famous by playing a cop on television. So facts about Ice-T. All right. Number 2.
America.
When approved as substandard Table D, how long do you have to wait prior to requesting to have it reevaluated?
1 year.
There you go. Each year on your policy anniversary date, you have an option to do that. All right, 2B.
You cannot go backwards on the rating. That's something that a lot of people want to know. Like if you're thinking you can improve your rating, awesome. It won't go below that rating. Right, Linus? Can you confirm that?
That I'm actually not sure whether, if you, I think yes, you would be able to keep the existing policy. All you're trying to do is maybe get better, but I'm not actually sure if you could potentially get worse.
Oh man, that wasn't what I was hoping for at all. We'll look into that and get back to you all. We learned that in Nashville that you could not get worse. So we'll double check that though.
Yeah, I don't believe it can get worse. All right. So then also, is there a way to find out why they received a substandard table rated rating?
Yeah, they can write a letter. I've had that happen lots of times. You would write a letter directly to the insurance company, including the policy number, and just ask them to give you the findings of why you got whatever rating you did, and they will tell you. It's definitely from your medical. Like for example, I just did another medical earlier this week for a new policy, and my medical records came out, and they send you an email, or you can, they leave a little thing you can call. And I went on and I pulled all my medical records. So that would have showed a lot. And it's usually simple. It's like kind of ratings is like, there's the green, the red, the green, and like it says normal and outside the norm. So if something was outside the normal, that's more than likely what the rating was, or something in your medical records.
Cool.
But they'll tell you.
Chris? Good.
Yes. Surprisingly, it was like freaking too perfect.
Work out a lot and swim and jog, and it makes a big difference. All right, so 2C, if you get re-rated substandard to standard, how does that affect the policy going forward?
Well, I mean, if you go from a standard or a substandard, that would be better, because a standard to a preferred is not a huge difference, but a substandard or like a class, or like a rated table case, if you went from that to like a standard or to a preferred, it'd be a significant increase in the cash value growth as well as the death benefit growth in the future. Yeah. So basically, if you think about it, the rating just makes the cost per unit of insurance more expensive, because the insurance company is looking at it saying, okay, because of these elements or these medical issues, this person might not live to normal mortality age. They're expected to live till this age. So then they basically it changes the cost per unit of life insurance. Therefore, you just end up paying more, which definitely affects the internal cash value buildup and death benefit.
All right. Very good. Cool. Those are pre-submitted questions. So we'll go ahead and move on to the comment section. This is where it gets fun. So let's see. So Luke said, hey, Tess, it's Luke. I sat next to you in Tennessee in Nashville. Pretty cool.
That's awesome.
Jason, are you still celebrating your birthday?
I'm done. But thanks for asking. I did a week of it, a week of celebrating, week and a half with Nashville. So
okay,
30 years old.
I'm still celebrating. My birthday was in January, but I have no shame.
You're a year-round celebration. You take a pause on your birthday, right? Chris, welcome to the show. Chris is a new client, so Chris, welcome. He's gonna do some.
He was super active this afternoon. He was super active on the wealth webinar. So
oh, cool, yeah. Chris,
smart guy, building some cool things in real estate, faith-centered guy, real awesome man. So good guy.
Cool, man. I like the last name too. All right. Casual Credit Gamer said, can you use PMC to lend relatively small amounts, say 10 to 30,000? And is PMC where you guys do the forklift flipping, or is that somewhere else?
Yeah, you could definitely lend small amounts. Like I recently piggybacked with another. So I had a lender from PMC who had 75 grand and just reached out to me on PMC saying, hey, I got 75 grand. If I find a deal for 100 or you find a deal for 100, would you be willing to go in for 30? So we ended up finding a deal. I didn't need to put 30 in. I needed to put 15 in on the deal. And that was the way I did it. So a lot of times at 10 to 30,000, you might have to find somebody else to go in on the deal with. I've done many deals like that where I've gone in on a deal with two people. So that's a really good way to do it. Now with the forklifts, we haven't yet gotten through the legal aspect to have the forklift on PMC. Probably could, but our attorney said, just hang on, wait till you develop the 3.0 version. And we got an accredited investor section of the site coming. So we're just on hold with that. So if you were interested in that, you would just call ARC. We're happy to put the contact info in the chat if any of you are interested in the forklifts.
Yeah, I'll put the link in the chat box.
Oh, thanks, Steven.
You just go to the page and scroll down. It's like the second video on the page, and you just click contact. Here, I'll just show you real quick. All right, so if you pull this page up, starts right here. Just scroll down past Chris and all his cool celebrity photos. Then you'll get to why you should be the bank, some great videos you can watch on your way down. And then you'll get to the case study on flipping equipment. Click contact ARC, and you're off to the races. Cool. Cool.
Good stuff.
All right, next question. Megan was going to ask the same question. Okay. Brian said, kind of dark question here. Here we go. But I understand a whole life is protected from legal action, but does that include divorce?
That's a really interesting question. So when we say the policy is protected from judgments and liens in most states, it does not say it is protected from your husband or wife. So no, the policy would become marital assets, and you'd have to figure that out. I've dealt with this many times. A lot of times, either the husband or wife, whoever the insured is, will maintain the policy. They would a lot of times the courts will ask you to change beneficiaries. I haven't seen a lot of cases where the courts have mandated that the policy be canceled, because that would be actually I haven't seen any. That would be very negative for the children if there's kids, because then the death benefit is done. And I've never seen courts ask for the cash value to be split. Usually it's just you have to name the other party, the divorcee, if that's the right word, as beneficiary, or the kids as beneficiary. But not saying that they can't make you take the cash value out and distribute it, because they certainly can. And I don't know, if you go through a rough divorce, they probably will.
Yeah, it sounds like this is it depends. Like that's a lot of good information Chris just shared, but it's probably state statute relevant, what's protected, and also how good is the attorney and how amicable or otherwise is the divorce. So
You want to keep that asset if you can, though. It's very
I
valuable.
certainly do. Pay the price. That's what I would say.
All right. There we go. Nice dark question to kick off the day. And I know this is not what the F, but we do have some breaking news coming in right now. You guys are not going to want to miss this. So I'm going to share the screen. Goldfish has officially announced a name change. They are now calling themselves Chilean sea bass because they would like to attract more adults to eat their food as opposed to just children. So breaking news. You heard it here first on CNN. Ask me anything from the BYOB.
Please,
right.
please tell me that's a joke. I mean, it was on CNN. So I already don't believe any of it. So I better not go to the grocery store and see Chilean sea bass goldfish crackers.
I thought you were going to show Trump serving French fries again at McDonald's.
No.
He's got no shame, man.
Ice cream and beans, he was out of there. No, that was a real article though. It just popped up on CNN. So, anyways, all right, where are we here? Who's marking these as stars? Thank you for doing that. Whoever's doing that.
Me.
Hi all. Great wealth webinar this afternoon. Thank you. Which would yield best growth? Paying more into PUA or paying back a loan from the policy?
Usually PUA, but it depends on where you're at in the policy in terms of years. But like in the long run, the PUA is going to pay more.
What's up, David and Dorothy?
Yep.
Get those PUAs in there, baby. All right, Mr. Jimmy Davison, 61. All policies on me were bought as ultra preferred. Was thinking about adding another policy on myself, but wanted your thoughts on what would be more efficient.
And I was looking for the
another policy on me or another policy on my younger wife or children.
And Jimmy, you do not look 61. Number one. Two, I think it depends on what you're trying to accomplish, right? Like even a super preferred policy on yourself, if your wife got the same rating, her policy will be better. It'll be more efficient from an efficiency standpoint. And then if you're doing protection and, building this for legacy, I mean, there's a lot to consider on what you're trying to accomplish. But for efficiency, women are always better if the rating's the same. So they just live longer and don't do dumb shit like they do.
Body if you can, Jimmy.
Yeah, I mean, I definitely think you should layer in some children's policies as well. Just keep in mind the children's policies are going to be limited on premium amount going in. Can't really do dump-ins, and it's built more for longer term. But, give us a shout, Jimmy. We can definitely create a few different, examples, a few different scenarios, and kind of pick what might work the best for you. Fair enough? All right. The beneficiary of the policy must be an American citizen. True or false?
False.
False. Yeah.
I learned something.
But something I think about every time I add somebody that's not an American citizen is how's that death benefit going to be paid out? And is it going to be taxable to this foreign citizen? I think so. So there's some other things to think about. And obviously it would have to be paid out in US dollars to a US bank account.
Yep. I came up with a client. I have a client who's a U.S. citizen living abroad. They want the beneficiary to be someone that's a relative but is not a U.S. citizen. And so that was the answer right there. Yes, they can, but you got to have a U.S. bank account set up for that type of purpose. So.
Awesome. Good stuff. Can a cat be a beneficiary?
Let's hope not.
No, but
I don't think so.
You could maybe set up your trust to benefit the cat.
I was
right?
just going to say you literally could set up your trust so that the cat is the beneficial owner of the trust, and then you would just have to have provisions in there in a bank account set up to serve the cat. And listen, that sounds absolutely crazy, but I guarantee you that's been done a lot of times.
It has. I actually found a story about it a couple of years ago when I was doing it in banking stuff, and I found where someone did that. And it was through the trust, and the person cut out the rest of the family, and had the cat be the beneficiary of the trust. And, oh my gosh, it was hilarious, and they did it on purpose to spite the family.
It wasn't hilarious for the family.
Yeah.
So
That's what I was thinking.
Yeah.
that poor cat's life is on the line.
Yeah,
Cat-
but no policy for you.
Yeah, exactly. Well, then when the cat passes, then the trust, all the money would go to a charity, a pet charity. So,
I guarantee that's how they set it up.
yeah, there's a double whammy. Oh man.
All right, Mr. St. Augustine, are you guys doing a deed in lieu of foreclosure on your real estate lending deals to avoid going through the foreclosure process? In Florida, it can be up to 12 months before you have to foreclose.
I mean,
That's interesting. You know, I remember my attorney talking to me about that. It would work probably definitely in Florida. Goodness gracious, I never thought about that. That's a very interesting way to do it. I'd have to run that up legal, but boy, oh boy, that if that would work to save time on foreclosure, just have them sign a deed in lieu. If the borrower would sign that, that would be a really smart thing to do. I can't imagine a lot of borrowers wanting or being willing to sign that. If they had legal representation, their attorney would be like, "Oh no," but what a good idea.
I've seen it. I've seen it.
So when I was doing subject to real estate deals in Washington State, I would do a subject to acquire the property, subject to, then I would sell it on a note. And inside the note to the end buyer, I put inside there that if something happens, it was deed in lieu instead of foreclosure. And so I would explain it to the buyer.
Super smart. Listen, I'm like not saying anything bad. That's really smart. And listen, I suppose if you could get them to sign it, that'd be a really strong position to be in.
Well, the way I explained it to when I was working with the buyer, I said, hey, if something happens, you do not want to go through foreclosure. It's very bad on your record, very bad on to have that history of that. So what we'll do is do a deed in lieu. I will explain it to them, put it in the contract. So if it ever did come up, it was already discussed. Now I've never had to do it though, but
Kevin Shortell teaches that when you're taking non-performing notes to do the deed in lieu.
Yeah,
It is state specific too.
Yeah.
So, all right, cool.
Yeah.
Great question, Chris. Yeah, exactly. Let's see. Okay. Antonio said, hi, I have a friend that won a lawsuit for her son. She received $158,000. What is this, a highway billboard? And the courts are having her place the funds in a restricted account. Is there a policy that can be enforced?
Yeah, I'm actually going through that right now. So in most cases, the restricted account would allow for life insurance. I mean, I don't know. I mean, there's different ways to do it, but you just have to check with the courts or with whoever's handling, the rulings on that restricted account. It's very interesting how this stuff works. The longer you do this business, the more crazy stuff you see, and the more it just starts to make sense. Like the courts are always going to lock monies up. I just saw it again with another lawsuit where the attorneys put everything into a trust, but the trust is so one-sided and so heavy on giving powers to the trustee, and the trustee is court appointed. It's wild when you really start getting into it. It sounds like that's what this is too. But the restricted account just is a general, usually will allow for life insurance because it's a guaranteed account. And I'm not sure what that means. Is there a policy that can be enforced?
I think they just mean, can they get a policy? So, all right. Jimmy said, so death benefit aside, family needs are met when I am gone. More efficiency will reside with a new policy on RISA.
Correct.
Reach out to Devin, original agent, or anyone, and it will get funneled correctly. Yeah, Jimmy, just give us a shout and we can help you out, and we'll make sure that everything goes around. Let's see. Brian said, do you all have resources or links to information about setting up a trust?
Of course. Yeah, we have several companies that do it. Main company we like using because they've got not only the trust department, but also the entity department and bookkeeping is Corporate Capital. They do a really good job.
All right. I just put my email in, Brian. If you want to email me, snaggy@chrisnagel.com. We have a really good relationship with them, and they'll take great care of you and connect you, hook you up.
Yeah, they're setting up a Wyoming holding company for me right now.
Nice.
Actually, I need to set up a new company too in the next week or two.
I need to close some.
Brent Carlson, if you're watching, I'll be giving you a call. I'll also see him. If anybody's coming to Charlotte in a few weeks, for the Private Money Club Money Tank, Brent Carlson will actually be in Charlotte for the whole time. So you guys will be able to meet him in person. Him as well as a lot of other really like high-level investors, experts in several different areas of real estate investing. A lot of people with big money are going to be there looking for deals and relationships. So if you're in any space around real estate investing, private lending, infinite banking, you're an entrepreneur, you're just looking to network, meet some new people, definitely be there in Charlotte, November 8th and 9th. It's going to be at the Charlotte Motor Speedway, but we are going to cut off in-person ticket sales probably at the end of this week. So get in now while you can. And if you want to bring a guest with you, we got some different things going on with that. So just give me a shout and or go to privatemoneyclub.com/money tank and grab your tickets because it's going to be an awesome event. All right. Let's see. I don't see any other questions right this moment.
Hey, Brian. So you're always saying back when I did sub 2 real estate, would you mind sharing there, like why you're maybe no longer doing sub 2 or what's the deal there?
I got into e-commerce and things like that. And just kind of, I was chasing shiny objects, which I do not recommend doing, by the way. So I got away from it, which I should never have done because it was good. It was lucrative. The other reason why is that subject to, which is buying a property subject to the existing mortgage remaining in place, is more appealing when the markets are recovering. So when the real estate market goes down, home prices, go down, but the mortgages don't. So properties, it's hard to sell properties because your mortgage is too high, and that's where subject to is really good. So in a current environment where real estate is very high, most people are not underwater, or they can sell their house very easily traditionally. So subject to is not as attractive. So that all being said, in about probably 2 years, it'll be a really awesome strategy.
Cool.
I used to teach it, so that's why. So I used to teach it to real estate people.
Yeah, Derek, the experience is going to be in February in Sundance, Utah. And
that is just an epic. Like, if there's one place that someone would want to go for the experience, that's the place. It'll be one of the best ones.
Yeah,
Better be going, Derek. Rory and I will be there.
What are the dates for that one, Stephen?
What's that?
What are the dates for that one?
Let me pull it up.
Somewhere around the 6th or 7th.
Yeah, you just post the link. Stephen, I can send it to you if you want.
For some reason, it's not pulling up right.
There's Fern. Fern's going to be there.
I'm going to text it to you.
All right. Any other questions while I'm pulling that up, and I'll go over that. Let's see here. Heather said she probably shouldn't ski the first time with a former snowboarder. Well,
you can totally ski with a former pro snowboarder because I don't ski.
That's a better way to go, I think.
Yeah, I mean,
they have very.
He's less judgmental on skiers, probably.
I'm not judgmental on anybody.
Oh, pro snowboarder! Look at that guy. Look at her.
There you go, Stephen. I just sent
Jumping over us as we go down the mountain carefully.
Sundance. There we go. Oh, we changed the URL. I got you. I thought it saved as the old one. All right. So Sundance, Utah. Thank you for asking. Very cool stuff. So let's see. There are payment plans right now as well. So if you want to pay over the next several months, it's a great option. But it's going to be February 7th, 8th, 9th. And then a few people are going to stay an extra couple days possibly.
Oh man, the snow's going to be so good that week.
Oh, it'd be epic snow at that time.
And they
beautiful. It'd be
lift.
warm.
Yeah, they just redid the side of the mountain.
Well, maybe not warm, but
absolutely beautiful place. They have
zip line.
They have
that site looks awesome.
Yeah, the hot springs are open now. It's going to be a really, really, really good time. So you can snowboard. You can, what is that when you walk with the things?
Snowshoe.
Yeah, you're going to be able to choose. You can go to the spa if you want one day. You can go. You do the zip lining test if you want. So
Wow.
so lots of different options for what we're going to do each day. And then we meet in the mornings. We hang out, do the adventures. Hang out with the owl all night. It's an experience. I'll put it that way.
It's a hell of an experience.
Definitely an experience. So reach out to us. You can go to the website right there. I'll put it in the chat box. Otherwise, shoot Shauna a text if you need any special arrangements or anything like that. And like I said, there's payments plans available as well. All right, cool. Let's see. Chris again. Chris, anyone who has bought in the last 2 years, especially in new construction neighborhoods, up to is an attractive option if someone wants to get out.
Yep. Yeah, because they're gonna have a hard time selling it without putting money into the pot.
That's for sure.
All right, Fern can't wait. Fern's got her tickets for the experience. Andy said, Chris, TLT is going down. I heard a new conspiracy theory that the new crisis is in the process of being manufactured to drop interest rates. Do people know something that we don't know?
Andy, you just said the exact reason why you'd want to own TLT. If the new process is being manufactured to drop interest rates, then you would want to own long-term treasury bonds, because interest rates going down raises the price of bonds. Now, so here's what's going on right now. TLT is going down, and it's going down because there is so much fear in the market in the short term. Have you seen the markets in the last couple of days? So fear basically drives the yield on bonds up, because people are demanding more yield to be paid to buy the bonds because of risk. It's just a generalized thing, but that has nothing to do with the long-term stuff that I always talk about. And when I say long-term, could be just next year. We will enter like a downturn in the economy probably right after the election, early 2025. It will continue. We'll probably end up in a recession mid to late 2025, somewhere in that area. I don't know. We can't time the markets. But at that point, the Fed will continue to drop rates. There's nothing manufactured about that. That's what the Fed does every time. So if we want to call it manufactured, sure. Every single time there's a slowdown in the economy, the Fed drops interest rates. That's the lever they use. When they drop interest rates, the price of the bonds will go up. But here's the thing I want to preface, because I've been getting this a lot. When the Fed drops interest rates, like they just did back was that September, they dropped interest rates 50 basis points. And then everybody was like, wait a second, TLT didn't go up. It went down. It went up a bunch before they dropped the interest rates 50 basis points, because it was already built into the price. So typically the market's very efficient. So the price is going to be built in to the bond, or the ETF, not well before, but before the actual call is made, because it's all built in. It's speculation. So it's just one of those things where you just got to hang in there and just buy more of it. I mean, I sold all of my long-term treasury bonds because I did some tax harvesting, but on, what is my date? November 18th, I'm going to buy them all back. Here's my list of all the ones I sold and what I got to buy back. But that way I get the losses. So I take the losses in 2024, I buy them all back and ride that roller coaster all the way up. But if you think there's some conspiracy theory that's going to change what's happened every single time since the inception of treasury bonds, sure, maybe you're right.
You never know, man. You never know this day and age. All right, here we go, Brian. When you set up policies for kids with the same company your policy is with, are they all listed on one username?
Yeah, if they all have the same policy owner.
Yes.
Yep.
Most of us here probably have multiple policies with the same company, and we can all attest that's how it is.
It's cool. You just type in your last name, and they all pull up right there.
Very, very good. It's actually a good reason to keep with one company, although it's kind of fun to spread it around too.
It is too. I would agree with that. I have several policies with one company, and I find it very easy to do that. But I also think you should have multiple policies.
Kind of like guns, you buy all the same ammo or caliber ammo, or you get a bunch of different kinds. So it's his
Very
preference.
Florida man of you. Well done.
Crap, 223 556. What was this one?
I'm probably going to miss this one. A 2-month-old and 3-year-old might be a bit too much of a handful.
Yeah, that would be a lot.
Yeah.
And
Dallas did ask, our kids are allowed on the Utah.
Of course, kids are allowed. They just can't go to the Owl.
They actually aren't allowed in there at all. It's 21 up. Well, it's Utah, so they have all these weird rules. It's not like in Florida where Bryce sits at the bar with us. Let's see. How is the experience different from the mastermind in Tennessee?
It is no comparison whatsoever. None. So the Tennessee mastermind was obviously, that's our money multiplier mastermind. We were in a conference room the entire time. So except for when we went to lunch across the way and then back in. The experience, you spend very little time in a conference room, literally just have breakfast, chat, discuss what's going on. Then we go out and do really cool shit like riding horses and zip lining down mountains. And we'll definitely be going up on the hill. We'll probably have a hot springs thing. We have all sorts of activities, not one that everybody has to do. You get to pick. So you sort of just pick which activity you want. And then that's what you do that day. And you go out and you do cool, memorable experiences with really cool people. And that's the whole idea. And then we meet back up at night. We have a dinner. Everybody kind of decompresses from what they experienced that day. And then at night, it's usually free for all at the Owl. At least that's what this one will be being at Sundance. And then we get up and repeat totally different experiences the next day. And so you're never really in a conference room. Just out doing wicked cool things. I don't even know what they are.
More
Drew
fun.
said it right. More fun, less speakers.
Yes, exactly.
It's accurate.
You'll have like a speaker during lunch. You'll have like somebody that, not a speaker, but just somebody that talks. You'll have somebody that talks during the morning, like when breakfast is served. And then just for added value. And then sometimes at dinner, we'll have like somebody stand up for 10, 15 minutes. Something like the Fullers explaining what they've got going on.
Cool. All right. So any questions coming out on Instagram, Chris?
Holy crap. I totally feel terrible. I was like neglecting Instagram. Let's see if we had any questions. Let's see. What is the show today? It's Ask Me Anything Happy Hour.
Speaking of ammo, you guys like my new antenna for my truck? 50 cal. Pretty cool, right?
You got a 50 cal?
No, it's an antenna for my truck.
Oh, you probably said that.
The antenna for my truck's like getting rusty, so I got to do it.
No questions over on the Instagram side. We only have a couple of people there.
Okay.
Instagram's probably throttling me because I posted something about Trump, or who knows. Who?
You know what? The F was a little hot this morning.
Oh, I did. I did post something about Trump. I posted a picture of McDonald's sign and Donald Trump standing there with a paint roller. He rolled out Mick, and it just says Donald's. They probably didn't like that.
That's pretty funny, though. I like it.
I thought it was funny. That's why I posted it.
Donald's. That's a good one. Some of the memes these days are just unbelievable. All right, if you happen to miss that one, we're waiting on questions. Get your questions in. There you go.
That meme could be taken so many different ways.
So, Chris, any new Porsches coming, or
No,
what do we got?
The only Porsches I'm buying right now have the 3-letter initials of IRS.
Okay, not GT3.
No, I'm sorry. I wish. The IRS, my silent partner in my company's decided to show back up to a board meeting and gave me a big invoice.
Okay.
So no Porsches.
All right.
Not a very good uncle, is he, Chris? That partner.
You're an asshole.
I mean, quite honestly, half a dozen Porsches in 1 year is probably a good number, anyways. But
Really, on half a dozen? Wow.
No, 5.
Just one. Come on. You can
Just
fix that.
1, 2.
a baker's half dozen.
Yeah, 5.
All right, here we go. Here's some questions. Here we go. What's up, Jay? Do you need an attorney if you're looking to lend money through PMC?
No, I mean, it's not a bad idea to have an attorney review all the documents. I always would tell everybody, have an attorney either draft or review the documents you're going to sign, like the note and the mortgage, but you don't need one. A lot of people, especially like in different states, will just use a title company, but most title companies have an attorney anyway that will review or make sure everything's done right.
Cool. Anyone with experience with accounts receivable factoring, lending money on money owed to service providers?
I don't have any firsthand experience. I've heard of it and seen it be used. I mean, it's very expensive from a rate perspective, but I mean, if you need cash flow, it can help. They're going to rob you blind from an interest rate standpoint.
Cool. Let's see. Eve said, we must be family. I have the same a-hole uncle. All right.
He is an asshole, isn't he? It's funny.
Do you have a policy just for paying taxes?
I do not. That is a good question. No, I don't have a policy for taxes. I'll be honest with you. Like this is a combination of 3 or 4 years. I can't remember how far back goes, but we'll call it 3 and 4 years of having an awful CPA and getting just what I would call some of the worst possible tax advice you could ever humanly possibly get. I happened to be smart enough to see some things that just didn't make sense. So I got audits, like internal audits done from 2 CPA firms that reviewed my prior tax returns, found a whole bunch of just clerical stupid errors that the old CPAs made. And then I hired a tax attorney to look at the structure. And that's when we blew the whole thing wide open and just had to, we unwound an entire trust structure, I guess is how you'll say it, which ended up, revealing some mistakes that were made on prior tax returns. So we went back and amended prior tax returns, which resulted in big tax hits because of things that the old CPA did that definitely they should have never, ever done. They would have caught up and bit me anyway. So I'm just the kind of person I like to get out and ahead of things. And yes, it hurt bad from a tax perspective. But now if I were to get audited, like I am freaking squeaky clean, like beyond squeaky clean. So that's what I wanted. I was willing to pay the price to have everything perfect. And boy, did it come at a cost. That nasty uncle was a real jerk. So I just didn't have time to get another policy set up for that. And I don't know if I would use a policy for that because it changes so much. But that's a good question. I've done case studies on using it for property taxes, never on income taxes. It still would work.
Cool.
Yeah, you're only limited by your thinking. I mean, that's why we set up this the second policy on me. It just depends on what's happening. But I literally had a uncle saying, "Hey, you're an S corp. Congrats! And by the way, since you're backdating, here's a $40,000 payroll tax bill. And if you don't want to pay all 40 grand to Uncle Sam without having that money do something," I said, paid the first check. You guys have heard me talk about this before, but then the second one, I had set up a policy, rushed to put a policy together. And then within a few years, at least that money is protecting my family and making money. Drew set up the same thing on his wife for his purposes because of my experience, right? So it just depends on what you're doing with it. Chris is probably better at making a spread. I was like, how do I not pay my uncle, who's not my favorite, more money? So
cool. All right, Brian, do you mind taking over? I got to bow out 10 minutes early here, guys. Appreciate everybody. I'll see you guys next week. And looks like you got a few good questions over there. Good to see everyone. Thank you, guys.
So J10, would you borrow from the same HELOC to start a policy? And then would you borrow from your policy at 9% to lend? So
I would borrow from my HELOC at 9% to lend. I would not probably more than likely would not take the HELOC, put it into the policy and lend from the policy. But mathematically, that very well might work. Brian, what would you think?
So I've done it before. It depends on if you're doing velocity banking or not. If you're doing velocity banking on your HELOC, then the math is going to make sense to borrow from the HELOC to fund the policy for the future value you have there. And then you lend out of the policy into an asset, and then the asset cash flow goes back into the HELOC and then back into the policy loan. So it's a circle, and that does make sense. My caution to people on that one is you have to understand how that process works. You have to be diligent on it as well, because you have to understand the flow of the money and be responsible with it.
And like anything, it's a learning curve, right? Like learning how to become your own banker and do all the steps. Like just give yourself permission that you might not know it yet. Like we're experiencing what Brian just said right now, like setting up the whatever bank you use, going to the bank that the HELOC's with and making sure the money goes back and forth. That's not simple. It takes a couple of weeks potentially to set the accounts up and have the money tested back and forth and to do the thing. So you're you're going to learn new things, as I'm doing right now, right?
Yeah.
So
So we have, and I have a lot of clients right now that are learning velocity banking and infinite banking. So it is a lot. So you've got to understand that you've got to gain that knowledge. And as Jason just said, you've got to gain the experience too.
We always make it sound so easy, Fouts, right? Like we make it sound so easy, and then you get in and you're like, why is this? Like, why can't it just, what? Like, it's just a lot of, like, Patty's like got a lot more patience than I do. And it's definitely patience. It's definitely being committed to the process of what you're trying to accomplish and keeping that in mind. So give yourself permission. I don't know it yet. So.
Right. I had a client yesterday, and this was his comment. He goes, I think I'm overcomplicating this. And as he was talking, I said, you're not overcomplicating it. Your subconscious programming is interrupting you. That's what's happening is your subconscious mindset, what you've been taught, is conflicting with what you're learning right now. And so you're internally battling with it and he's like, crap, you're right. But that's what's happening is you're learning something new, and it does take some time. So, yeah, I mean, I think what, if you're doing velocity banking on like a 9% HELOC, you can get the effective rate of the HELOC simple interest down to around 3 to 4%. So that's what velocity banking can do because of how it functions. So you're not really borrowing at 9%. If you're doing velocity banking, you actually can get it down to around 4%. So that's the mindset shift that has to happen. So, good question, though. Chris, no, so the Augustus rule is a huge way to write off as a business owner. So does anybody else use the Augustus rule?
I do. I mean, when we do the masterminds at my house, I always rent my house to Money School, and Money School pays the daily rate. And it's tax free. Yeah, of course.
Yep.
I wish I could use it more. I honestly just don't have the fortitude to rent it out that many days. It's a lot of work.
I've rented mine out to myself when I'm doing video editing and video.
Yeah, that's a great idea. Should have never built a stupid studio here at the office.
That's what I was going to say, Brian, too. The way I automate that, because I do the Augusta rule every month, the way I automate it is because it can be complicated to like track, 14 days out of the year, what days should I use? How should I calculate it? What I do is I say, great, well, I do film stuff for content every single day almost. So I honestly set up a monthly automatic ACH transfer with a invoice to myself every single month. And so I don't have to ever track or manage the Augusta rule, but that's automatically happening in the background. Every month, the payment's going to me. I'm just moving money around pretty much, but it's a way to have less taxes for sure.
Yeah. So just show everybody who's listening, the Augustus rule, it's IRS code 208B or something like that. But you can rent your home to a business for up to 14 days per year, up to $14,000. It's a deduction to the business and tax-free income to the homeowner. Or the home, person that operates the home. Yeah, 288. There we go. Thanks, Linus. Yeah, I don't remember what it was.
You said up to $14,000 a year. Is that true?
Mm-hmm.
I don't think there's a cap on the amount, but it has to.
Be provable.
Yeah, it has to be justified. The way my tax attorneys mostly teach is to do monthly meetings of your company, and then that gets you to 12, and then the other two, one would be a shareholders meeting and the other one would be another one. Use your imagination.
Shareholder meetings. Yeah, it's a great idea. It's a good way to track it too.
Yeah, I haven't looked at it in a while because I just haven't. I just kind of automate it. I thought it was limited to a certain amount of money, but if it's not, that's even better. But you got to be able to prove it.
I'm pretty certain it's limited, but I would love to know. I don't know for sure. So
yeah, cool.
I mean, the government creates problems and then solutions for it, right? So
yeah, for sure.
Well, I know someone who hosts events in his house in a big room, and it's like an event space, how big the room is in his house. And so if you look at comparable event spaces for a day to rent, it's like 10 grand in his neighborhood. And he does a monthly event. So he does a 10 grand a month Augusta rule write-off.
Oh, wow.
He's paying his business.
Okay.
Awesome.
Maybe there's not limit.
Man, mine ain't limited. I had a CPA that he would actually rent his employees apartments or homes for their staff meetings every week or whatever. And that's how he paid them their bonuses. But they were getting their bonuses tax-free, right? So they have to pay they'll pay any tax, and it's a deduction in his business. So
see, they're pretty smart in how they word it. There is no dollar limit. I just looked it up. There's no dollar limit, but you can exceed fair market rental value for your property, which all properties clearly are going to have a fair market value. So it's fair market value per day times 14 days. I mean, essentially that's the limit, but they say there's no dollar limit.
Oh, cool. Awesome.
It does also depend on what event it's for. If it is a shareholders meeting with 2 other people, you have to compare it to that. But if it's an event with 30 people, that's going to be a different price than someone who has 2 people. So you want to find ways to maximize it.
Yeah, Carson, it's like you said. I mean, you could rent a room in your house, which would have one value, or you could rent your entire house, your grounds, your garage, and that's going to have a totally different value. So, you know, with that person you mentioned doing those events, you know, that's a very smart thing to do. And I'm not going to lie, when I first bought my house, that was my plan. And Tess actually was at one of the first events we ever did at my house. That was the intent of my basement, was like to do these events on a regular basis for the Augusta rule. And well, just, you know, the wife had another idea.
Cool. All right.
So wanting Chris out of the house.
Yeah. All right. Herminio says, you guys always speak about taking loans, but I have not heard about paying the annual interest balance to avoid increasing loan balance.
Oh boy, you haven't watched many of my videos. I don't know a video that I have done that I haven't talked about paying the annual interest and paying the loan back. Every video I do talks about repaying and recycling and recapturing the payments back into the policy, of which in that pays the interest. Yeah, we always
create a schedule, pay it back, you know.
Yep, always.
And if you hit hard times, make sure you pay that interest.
And I'm not coming down on you about that. And also, first off, just from your photo, thank you for your service.
Absolutely.
But yeah, you definitely want to be very regimented. Like, don't just be a loose cannon and steal from your bank. If you're going to take loans from your policy, from your bank, make sure your bank is getting paid back for those loans the same exact dollars you would pay any other bank. If you pay Visa $100 a month, you pay yourself $100 a month at 12% or whatever interest rate they charge. Just that, I don't recreate anything. I literally, everything is exactly what I used to pay the bank or what I would pay the bank, right down to when I buy a car. I go to either bankrate.com or I go to the dealership and I say, you know, what is the best rate you can get me? Sometimes I even go back and forth with them. They get the best rate. And then for the term that I want, and I pencil it, we do a note here and I set my payments back to my policy for that exact dollar amount, of which always, just for what you were saying, the amount I'm paying my policy back, the rule is it's always more than what the insurance company charges me. The cost of capital, let's say it's 5.2% for the insurance company's interest. No loan will ever be taken from my policy unless I can earn more than 5.2% ever. That's a simple stated rule that I set for myself.
Yep.
And I don't want to mess up your name, but Herminio, thank you for your service.
Yeah. All right. Let's see. Andy said, if your trust is a beneficiary of your life insurance policy upon graduating, does that mean that even though the trust will get the death benefit without tax implications, the actual distributions to the trust beneficiaries will be taxable?
Wait, read that again.
Yeah. So if your trust is the beneficiary of your policy and upon graduating, meaning you passed, does that mean that even though the trust will get the death benefit without tax implications, the actual distributions to the trust beneficiaries will be taxable?
Possibly. It depends on the structure of the trust, depending on, there's so many variables, but trust, any income that a trust makes is taxable and usually at a higher tax rate than you. So, you know, a lot of people like try to use trust for, you know, avoiding taxes. Now, notice I'm not saying tax planning, I'm saying avoiding taxes, and trusts are not a good vehicle for that because like trusts are taxed at a higher tax rate than you typically would be taxed. I think even at the highest tax bracket, the trust is still higher. So when your beneficiaries have the money in the trust, depending on how they're taking that distribution, yeah, there is potential taxes on that.
Yep.
But again, consult with your CPA because there is ways to do that where it's very beneficial to do it. But, you know, like the reason you'd have your policy, sorry, I don't mean to go deep on this, but the reason you would have your policy pay a death benefit to a trust is for one of only a few different reasons. Number one, because it's part of estate planning. And just so you know, if your estate exceeds, and they just increased it a little bit, but let's call it 28 million, okay, jointly, you know, married couple. So let's say it exceeds 28 million. When the husband and the wife both pass, if your estate exceeded $28 million, that above and beyond the exemption is taxed at roughly 40%. So the reason you would have the death benefit go to the death benefit go to the trust is that bypasses your estate. So now if your death benefit's 10 million, that's $10 million that bypasses the estate taxes. So you're not paying 40% on 10 million, which is far more than what you would pay from a tax standpoint. The only other reason you would do that is for controls from the grave. You know, you got a big death benefit that's going to go to a minor or go to a family that maybe is reckless with money, and you don't want them to just squander it all. So you send it to the trust. The trust has rules on how they can use the money. This is how mine's set up. And then, not that I think they'd squander it, but just protection so that multiple generations benefit. And then you can set rules within the trust of how that money can be used by the beneficiaries. That's the smart way to do it.
Yep. I love that you have that, Chris. You can be the example for all of us reading, you know, what would the Rockefellers do? That was a thing that stood out, is like being marionette, building that legacy beyond the grave too.
Yeah, exactly, man.
It's cool.
Yeah, my 24-year-old daughter would blow it all in clothes and shoes. So that's all.
There you go. Well, that is it, folks. That is the last question we have in here. So awesome.
We did it as if it's surprised. All right. Well, with that being said, I'm actually chatting via text with someone who I didn't know was on Ask Me Anything. So awesome to hear and see everybody here. You know, Chris Snow, great having you on Wealth Webinar. Hermino, thank you so much for being here. And again, thank you for your service, and thank you for your service to all of our servicemen and women and all of our first responders. We appreciate what you do, and you know, you taking
Chris, as you wrap that up, just with Chris and others that are here, like J10's always here. Like the people that are always here, keep being here. Like this is where acceleration happens. This is where the community is getting built. Like I don't think any of us really, well, at least I can speak for me. I didn't know any of these folks 2.5 years ago. Right. And as we're building the community, it's going to get bigger and bigger and bigger. And we're doing nothing but bringing light and truth to finances and really helping people in a time that's not going to be very easy in the upcoming year. So.
You know, I can add to that too. That very first mastermind at Chris's house that he was talking about, I stood in that driveway and looked at everybody sitting at the tables eating, wondering what I could possibly add, never imagining I would still be here almost 5 years later.
I was thinking about all the knowledge that was shared just in this one show. Like I learned something, like every show, like every single show, I write something down, learn something new. I invite everyone to keep bringing people. So bring somebody else next time, Chris. Bring the wife. I know she's excited about this too. So
there you go.
With that being said, folks, thanks for joining us for another Ask Me Anything happy hour. We'll see you next time. And I'll see some of you down in Orlando for the fantastic event. I am hopping a plane tomorrow, speaking, I don't know what day, Saturday, Friday. Thank you, Jason. Speaking Friday. So if you're going to be at the fantastic event, awesome. If you're not, make sure you hit us up, Shauna at chrisnoggle.com, and get your tickets for the Orlando Fantastic. See you there.